Hello guys, welcome back to the channel. In today's video, I'm going to be doing a portfolio update on my stocks and shares ISA, the one I put £10,000 into about a month ago. A lot's gone on in the month I've been off. I've been away, so that's why the video's taken quite some time. I'd like to ordinarily do these updates every couple of weeks or so, but we do have a lot to talk about given what's happened in markets. So I've got my laptop in front of me. Let's just dive straight into the screen and I'll show you what's happened, what I've been buying, and how the portfolio has performed over the last sort of month or so. And as always, the standard disclaimer does apply, as it does with all of my videos and pretty much everything you see on YouTube. This is not financial advice. This is just what I like to do in my own investments. It's for education and sort of entertainment purposes only. So please, do your own research and don't just blindly copy what I'm doing or what anyone else is doing. So with that said, let's dive into the portfolio. Okay, so here we are on the portfolio Excel file that I showed you in the previous video. Pretty much shows you the overview of what I'm holding and how the performance has been over time. Obviously, we haven't had it for too long, but it should fill out as we continue to go on the series. And I think it probably makes sense to start at the top with this lovely big red number that you can see on the top here, minus £922, which equates to about a minus 8% gain. And when we come onto the charts, you'll see that I pretty much started this series at the top of the market, so it's really great timing for me. Really makes it look good. But again, this is a long-term thing, and as we continue to go through the series, it should pick up. But anyway, yeah, the performance has not been good so far, especially in the more growthy, more sensitive areas of the market that I'm invested in. So you can see the three names here: BlackRock, Global Equity Unconstrained, US smaller companies, and basically technology fund are down pretty significantly, whilst the rest of the portfolio is sort of remaining strong. So in some ways the portfolio is doing what I would want it to. You wouldn't want everything down at once, or everything, well, you would want everything up at once, but strictly speaking you probably wouldn't, because of how that sort of smooths the journey over time. You want one thing going up and one thing going down, but everything up over the long term. But anyway, yeah, it's been a rough time for the more sensitive areas of the market. Trump has been let's say, been making things interesting in global markets, in global economies, with his tariff comments, and no one really having any idea what's coming next. And again, when I come on to talk about the funds themselves and why they're performing so poorly, I'll talk you through that when I pull that up on screen. The good news is I was paid. Yeah, good. I was paid earlier this month, well, only a few days ago, on the 7th, and with that I contributed £1,100. And what you'll see as we go throughout the series is I like to buy things when they're down. So this month I've invested in the three weakest funds, as you might expect, because over the long term, again, I expect these funds all to do well. So you want to be buying at discounts, and when we get sell-offs like this, it makes sense to buy the stuff that's down the most, in my opinion. So 450 went into US smaller companies because that's down a lot, 16.51% in a month. 250 in tech because I've got some tech. So there's some tech in the global equity fund anyway, so it doesn't make sense to really go overboard on that. And then the BlackRock fund, I do really like that fund, so I don't mind topping up that whenever it comes down. And again, we'll come on to that when I want to move on to the other screen. Portfolio over time, we've only got 3 entries in here, but you can see that gain figure is going in the wrong direction so far, minus 822. Well, that should be 1,100, 11,100, so I'll have to change that after this. But anyway, I think all that really matters to me is, I mean, it's easy to say this when things are down, but this overall bar, this overall number is going up over time, and sadly it's only £178, despite adding 1,100, hence the minus 922. But it's, as I said, a long-term game, and yeah, we'll see how it goes over time, and I'm perfectly happy with how things are going so far, because the more defensive areas are doing their job, and the growthy areas, when we get a sell-off, are going to sell off significantly. So with that said, we come on to TrustNet, which I said we were going to use. It's a really cool sort of charting software, and what we've got on here at the moment is, I mean, it's quite small to see. I should probably zoom in slightly. Let's do that quickly. If you need glasses, then sorry, but I can see it, so that's all that really matters to me. So A, B and C, they are the more defensive fund holdings. Fidelity Special Situations is a UK fund. The Global Capital, Polar Capital Global Insurance is, as the name suggests, an insurance fund. And then you've got Health and Pharma, which is pretty much, not always, but pretty insensitive to the business cycle because people get fat and sick regardless of what's going on in the economy. And then, as you can see, the three funds I topped up are at the bottom. And then in the middle there, you've got D and E, which is the global benchmark, if you like. I don't really benchmark my investments, but that's a global sector, a global equity sector. And then you've got my portfolio in E. So you can see the two components of the portfolio, the growthy side and the more defensive side, working together quite nicely to sort of insulate that downside. And again, just to quickly show you what this would look like if I'd have started this series at pretty much any other time. Let's put it on a 1 month, get rid of some of the 6 months, sorry, get rid of this noise. And I'll leave the global one on there as well. I mean, I haven't timed that great, have I? Let's put it that way. 3 years, that's it's not a great time to start the series, but we can move from it and that'll be fine. Asset allocation, I wanted to touch on as well quickly, just to show you a look through of how the portfolio looks. That's not too, this bit up here is not too helpful because international equities could be anything. Sector-wise, healthcare, again, we've got that defensive component really helping to insulate on this downside move. We've got financials as well, which are doing quite a good job. Trade, don't know what that means, but I'll take it, I guess. And then insurance should really be tied in with the financials, but it hasn't been. And then region-wise, so USA, UK, Bermuda's the insurance companies again. But I wanted to touch on the USA side. I'm sure many of you, well, if I get many views on this video, many of you will be invested heavily in the US. And with markets how they are at the moment, that might be quite painful, but it does make sense even to be overweight even. Well, I'm actually underweight, but to have a sizable allocation to the US regardless, because it's still the most, as I said in my previous video, the most capitalistic economy. It's still, the powerhouse of the global economy. It's completely shareholder focused. It's the most deep, broad and liquid market for stocks. So I'm perfectly happy, even if the US continues to fall, to have that 63% and even go higher if it continues to decline. So that's the portfolio as a whole. I've darted around a little bit, but hopefully you followed along. And if you have any comments about what I should focus on going forward, please let me know. I did want to touch on the two funds I mentioned previously, BlackRock Global Equity Unconstrained and the Tech Fund. So the BlackRock Fund is effectively a highly concentrated fund focused on what they believe to be the best businesses in the world for the next 10 years or so. And what comes with that is a lot of growth. But what comes with growth is a significant sensitivity to uncertainty and stuff like interest rate changes and all that sort of thing. So when Trump comes in and causes a load of nonsense, although these stocks will be, for the most part, pretty resilient businesses and their earnings and revenue should continue to grow. For example, Microsoft, I've got a video on that coming up. Stuff like Novo Nordisk, which is the weight loss drugs, that's almost completely away from what's going on in the economy. The way shares are valued effectively works on interest rates and uncertainty. So when that goes up, when interest rates go up, when uncertainty goes up, the share prices sort of come down as a direct consequence, which can get a bit technical, but just take my word for it. And feel free to search up time value of money or discounted cash flows in your free time if you want to. But what it means is, and the same applies to tech, you'll see a lot of similar holdings in both of these portfolios. The fastest growing companies, the strongest ones, the strongest earnings growth are hit hardest when uncertainty does occur, because obviously that directly translates into what to expect, and then again that discounted cash flow component. So yeah, like I said, it's been a bit of an all over the place video. It's my first one back, my first video back in like 2 or 3 weeks. So yeah, if there's any questions on what I've gone through and any sort of thing you'd want to see change for the next video, then let me know. But that's the update. The defensive part, as I said, is performing how I'd like it to. The growthier part is not performing how I'd like it to, but how I'd expect it to. It's allowed me to add at lower prices, which I'm more than happy to do. I used to be 100% in Bitcoin, and I held that from £14,000 down to when the value of Bitcoin was in the price of Bitcoin, $14,000 down to $3,000, and and then I held it all the way up to 60, 65, and then went back down to 30. So these small sort of 10, even 20% moves in the stock market don't really affect me that much anymore, especially when I know that I've got the 1,000 or so pounds going in every month. It just means I get to buy at cheaper prices. So that's the market. Hopefully you found this video useful. If you did, please subscribe, leave a like, and yeah, catch you in the next one.